Everybody, I hope you can all hear me clearly. My name is Regan Greer. I'm the Change and Communications Manager here at the QBCC. Before we kick off today, I would like to acknowledge the traditional custodians of the land on which we meet today for all of us, and would like to pay my respects to elders past, present and emerging. So this is our minimum financial requirements for licensees webinar. Now I'm going to take us through a bit of a range of information to do with the minimum financial requirements. Before we get into that, on the right hand side of your screen, you will see that there is a questions field, so you can type your questions into there. I am going to address a number of these questions as they come through towards at the end of this presentation. You'll also know that in the right hand side of the screen there, I've got Laura sitting here with me, and she's actually going to put in a link to where this set of PowerPoint presentations are held on our website. There is also a minimum financial requirements handout that's also on that same page. There is also, we've run sessions on minimum financial requirements for accountants, and there is a specific set of PowerPoints on that same page that accountants can access. So without further ado, I will kick off the formal part of this presentation. So I'm going to outline a little bit of background information just to give you a bit of context to this new legislation. I'm going to go over what's changed and how this will impact you. We'll have a look at what you need to do to make sure that you're doing the right thing. I'm also going to walk through, and you'll hear me mention a number of times, the online portal. I've got some screenshots, so I'm actually going to walk you through what that looks like, and I'll also give you some key points to take away with you today. So going into that background, so for those of you who have had a license for some time may remember that prior to October 2014, when you renewed your license with the QBCC, you had to provide us with certain, depending on what your financial category was, annual reporting that aligned with your renewal of your license. However, since October 2014, there was the introduction of the minimum financial requirements policy. Now, that policy removed that requirement for you to provide the QBCC with information on your financial situation at time of the license renewal. However, since 2014, there's been a number of quite devastating insolvencies that have taken an impact or had a massive toll on the industry and the broader community, highlighting that the QBCC really requires that increased transparency in a licensee's financial situations. And this is to help us better detect and mitigate the impact of those potential insolvencies and corporate collapses. So if we sort of fast forward to 2017, the state government released the Queensland Building Plan and undertook extensive consultation on it, exploring possible solutions to a number of key industry issues, one of which was industry non-payment. Out of that came strengthening or a requirement to strengthen the licensee's minimum financial requirements. So then in October 2018, the state government again went out to the construction industry and was asked for you to provide your input and concerns and any feedback on some key proposed changes to the strengthening of the financial requirements for licensees. So if we move forward now, before we get stuck into annual reporting and what that all means, I'm certainly not an accountant, and at our recent roadshows, we know that there is a huge number of licensees that don't understand the terminology behind it. So I'm going to cover off a few key terms that you'll hear me speaking about when I'm talking about annual reporting. So one of the first things is net tangible assets, or NTA for short. And essentially that refers to the total assets of a business, less any intangible assets. Now, intangible assets are things like patents and trademarks. Now, your net tangible asset calculation also needs to be less any liabilities. So you must own your assets both legally and beneficially. Now, you can't include assets that are held on trust for another person or a corporation. So those NTAs and your liabilities work together to create a current ratio, which means for every $1 liability, you have at least $1 asset. Now, that current ratio shows the amount of current assets of a business in relation to its current liabilities, and this helps determine the company or the individual as a licensee's financial viability. So as I mentioned, that's a 1-to-1, so you have to have that $1 asset for every $1 liability. Now, some examples of assets, as I've listed there on the screen, include cash, collectible investments. It could also include amounts that you are yet to be paid for work that you've completed. Assets also includes vehicles, property, and also any amounts owing to you by a debtor. Now, items such as jet skis, boats and race horses, and collector's items such as stamp collections or painting collections are considered disallowed assets. Now, these cannot be used in your asset calculation. Now, the important piece behind your net tangible assets is that it will determine your maximum revenue for the forthcoming year, and I'll explain maximum revenue in a moment. Now, the next topic there is a deed of covenant and assurance, or essentially a deed is what it's sometimes referred to. So if a licensee, such as a company, doesn't hold sufficient assets to meet the financial requirements to hold a QBCC license, those net tangible assets that we've just listed before can be guaranteed by way of a deed to the company, and that's usually done by the directors. So this deed essentially outlines the financial connection between the covenantor to the licensee. And where there is a deed in place, the person is guaranteeing that if there is a financial difficulty faced by that licensee, then the amount outlined in the deed can be used to settle the company's debts if they go into liquidation. Now, the deed itself is a legally binding document. There is a statement of a statement of covenantor's financial position. Now, when we're talking about the amount outlined in the deed, it's on that statement of financial position where the amount is outlined. If we look at what is a liability, so that is going to include any debts or obligations that you must pay or settle within a certain period of time or pay on demand. So if there's an amount of a related entity loan. Now, all of your liabilities have to be taken into consideration. Now, a very basic example of how assets and liabilities work together is if you and your partner own your home in a 50-50 ownership arrangement, you can only use your 50% as an asset. Now, if you have an outstanding mortgage amount, that must be considered as a liability. Now, I mentioned before when I was talking about net tangible assets that your net tangible assets can determine your maximum revenue for the forthcoming year. So your maximum revenue, or your MR, includes the total income that you receive from the building industry and any other source, excluding salary, and is determined by your net tangible assets. Now, this maximum amount that you can this is the maximum amount you can turn over. It's not the amount that you must meet annually. Now, you can increase that maximum revenue by up to 10% without obtaining prior approval from the QBCC. However, if you're going to increase your turnover by more than 10%, so business is great, you're expanding, then you must first provide us with a new financial declaration or MFR report, depending on your financial category that you sit in, that supports that increase. So that will show that you have a higher level of net tangible assets to support a higher maximum revenue. Now, a common question that we did get asked at our roadshows is, why do the QBCC need to know about my revenue from all sources? Which is a really good question. Essentially, if you have a hairdressing business on the side, for example, and you're also doing construction work, if that hairdressing business that you've got on the side faces financial difficulty, that is going to have a flow-on impact to the work that you're doing within the construction industry. Looking at financial categories, you can see them all listed there on the screen. We've got SC1, SC2, and then we've got categories 1 through to 7. If you are able to, if you've got it in front of you, that handout that I mentioned before, it does have a table in it. If not, I'll show you those on the screen very soon. But the financial categories has a dollar amount for each of those categories, and there's also a minimum amount of net tangible assets required to fit that financial bracket. For example, if your turnover is $3,001,001, then you must hold a minimum of $156,001 in net tangible assets, and you would be considered a Category 2 licensee. If you are unsure about your net tangible assets and your maximum revenue, the QBCC website has a calculator, and I might get Laura to add a link to that NTA maximum revenue calculator in the chat on the right-hand side of the screen there. That calculator helps you match your assets to your revenue. For example, if you know that you would like to increase your turnover to a certain maximum revenue, but you're not sure what net tangible assets you would have to have at a minimum, you can plug in the maximum revenue and it will tell you the minimum amount of net tangible assets you need to support that. Now, vice versa, if you know what your net tangible asset amount is, but you're not sure where that puts you in the financial category, you can plug in your net tangible assets and that'll tell you what your maximum revenue is. Now, I've got there, the second to last bullet point is online portal. So it's a safe and secure mechanism where you can actually go and submit your financial information and upload any documents. And I'll show you a bit of a walkthrough of those screens soon. If you are or have done or currently use the MyQBCC platform to, say, lodge your home warranty insurances or fill out adjudication applications, you'll now see that you can actually lodge your financials through there under the heading of minimum financial requirements. The last point there is MFR policy versus MFR regulation. So I mentioned at the very beginning that in October 2014, the MFR policy was introduced. Now, it's quite timely to mention the QBCC does not write legislation with regards to acts and regulations. However, that MFR policy was written by the QBCC and approved by the QBC board. So that policy has been in place since 2014. The state government has decided it needs to be put into a regulation. So the state government have written the regulation for us. I'm actually going to go through a little bit more information about what's in that regulation and what's commenced when. Just a bit of a high-level time frame behind the new MFR regulation. I mentioned the first couple of points already on that screen. But you'll see there that the MFR regulation was made in December 2018. Now, that's only a partial document. It's currently sitting at about 16 pages. And that came in with a phased implementation approach. The first phase commenced on the 1st of January. And what is in there is a more fleshed out definition of net tangible assets, and also has introduced that annual reporting requirement. Now, key date for our licensees reporting is for categories 4 through to 7 licensees. So this is licensees with a turnover of 30 million plus. The 31st or on or before the 31st of March this year, you are required to supply your financial information. I'm going to give a bit more around what that actually means shortly. Our next key date there is, it does say the 1st of April. However, we just yesterday had the full minimum financial requirement regulation approved by the state government and made available to us, and that is actually now going to commence on the 2nd of April. I'll talk a bit more about that in a moment. The next key date that is probably going to impact a majority of you listening is if you are a SC1 or SC2 or Category 1 through to 3 licensee. Now that's essentially anyone with a turnover under 30 million. You on or before the 31st of December is when your due date for supplying your financial information is going to be. So who's going to be impacted by these changes? If you hold a contractor license, contractor grade license, then you're impacted by this. If you only hold a site supervisor license or nominee supervisor license or occupational license, then you are not required to supply us with any financial information. Another question that did come up quite a bit at the roadshow was if you were to hold a license in your own name, but you also have a company license, which is where all of your work gets done through, do you have to submit financial information annually for both? Well, essentially the answer is both do, because if your personal license is a contractor grade license, you're still going to have to supply us with your annual financial information. But remember before when we were talking about maximum revenue, it excludes salary. So the purpose of you giving your personal financial information, even though all of your work is being done through your company license, is because you've still got a contractor grade license. At any time, you can enter into contract under your own license number personally. Then you need to make sure that you meet the minimum net tangible assets required to support that, even though you may just be drawing a salary from the company. But if your actual license has the word nominee supervisor on it, then you're not required to supply anything for you personally. Now, if we have a look at what has commenced under phase 1. So from 1 January until the full MFR regulation is implemented, as I said before, that's the 2nd of April, we're going to see the MFR policy work side by side with the MFR regulation that was introduced. Now, that MFR regulation has brought about this reintroduction of mandatory annual reporting. Now, I'd just like to explain that a wee bit more. I mentioned before, if you'd had a license prior to October 2014, you will have been giving us certain annual reporting documents that you had to go to an accountant and get specifically prepared on our paperwork and submit that to us annually at the time of your license renewal. Although from 1 January onwards, you are going to be annually reporting, it has now been streamlined to more align with what you're doing as part of your usual business practices for the purposes of, say, your tax or asset reporting if you're a reporting entity. So although yes, it is a reintroduction, it has been a lot more streamlined. You don't have to go and get specific documents prepared for us if you are an SC1, SC2 or a Category 1 through to 3 licensee. Also, what came in is prior to the 1st of March 2018, we didn't have project bank accounts in existence. So the new regulation has provided some clarity around when money held in a project bank account can be used as an asset. For example, if you have a project bank account on foot and say you're a subcontractor and you have X amount of dollars sitting in that retention account, that potentially could be used as an asset. Another thing that was introduced is historically our licensees have had a flat 30% reporting of a decrease in net tangible assets. That is still the case for majority of our licensees, unless you are a Category 4 through to 7, which is a 30 million plus turnover. You now have to report a decrease of your net tangible assets of 20% or more. Now, if we also look at what's coming in April, so in April, so as I mentioned yesterday, the Governor and Council approved the Queensland Building and Construction Commission MFR full regulation. It's now available on the government legislation website, and this now introduces higher reporting standards for companies with a turnover in excess of 30 million. There is a change that may actually impact some of you. If you are currently sitting as a Category 1 licensee and your turnover is between 600,000 and 800,000, from the 2nd of April, you will be considered an SC2 licensee, which means you're actually self-reporting to us. And you'll see when I go through the requirements soon that there are differences between Category 1 through to 3 reporting to what there is to SC2 licensee reporting. What that means for everybody else who is currently an SC2 licensee, from the 2nd of April, the required minimum net tangible assets will increase from 36,000 to 46,000. Now, don't panic. You do have until the 31st of December to meet that higher net tangible asset. There's also a requirement for licensees to provide additional information to substantiate deeds or related party loans. And there's also an introduction of stronger penalties and enforcement action for licensees that do not comply with the new annual reporting requirements. It's also now an offence to not report a relevant decline in net tangible assets within 30 days. So I mentioned before, for Cat 4 to 7 licensees, that's 20% or more. For all other licensees, it still remains at 30%. Now, let's have a look a little bit more about what annual reporting requirements are and online and the online portal. It's going to be important to just mention here that 2019 sees those 2 different reporting dates based on your turnover. So the first one, as I mentioned, is the 31st of March for Cat 4 to 7 licensees. The second one is the 31st of December 2019. Moving forward from there, you will have will allocate all licensees with a new annual reporting date that best suits their business practice. So I'll talk a bit more about that in a moment. So let's have a look at the online portal. So on the QBCC website, you can access the My QBCC platform. There's a link found in the homepage at the top of the website in the top right hand corner. Now, once you're logged in, you'll be able to access all the MFR forms under the heading minimum financial requirements. Now, there's a number of actions that you can actually take within My QBCC. Like I mentioned before, you could actually do and you can see on the screen there, you can lodge complaints, lodge an adjudication application, or even send in a money's owed complaint form. And down the bottom of the screen, you can see in red, I've put around the forms. So under action, you can start a new form, or you can resume a previously completed form. Now, this means that if you are wanting to actually go through at your own leisure now and just have a look at potentially what you might have to fill out, you can actually start a form here. Nothing's going to come through to us until you get to the very end and you submit it. So you can actually save the form partway through and come back to it at a later date. You also have the ability to nominate a representative to act on your behalf. So if, for example, you want your accountant to actually go in and do this for you, or say your partner, or you may have a senior employee that you would like to have go in, you as the licensee would have to log in, or if you're the director of a company, you'd have to log in. You'd have to enter in the nominee's details. Now, they'll receive an email to complete their own registration. And we've had questions from accountants about what happens if I've got, let's say, 10 different licensee clients and I want to submit all of their financial information. The licensee, yourselves, would actually have to go in and nominate that accountant. If 10 of you nominate the same accountant, you'll see in a moment that they will have a screen where they have to select the licensee that they're working on behalf of. So you can see on the screen, this is where you would go in, you can add a new representative. You can also manage their details. So you can actually click in here. Make sure you click enable. You can see here, I'll just point to it. You've got to click this enable button to make sure that you are allowing them to submit annual financial reports on your behalf. If, for example, you don't want them to be able to do this in future, if they're no longer your accountant, no longer your employee, no longer your partner, you could actually click in here and disable them. So the first steps, what would happen is once you've actually gone in, and I'm actually going to talk about the required documentation very soon, but you would have this open in front of you. And in here is where you would see the licensee that you wish to take action for. Now, before I was mentioning if you are the director of a company, but you also hold a contractor license in your own name, you would see both listed here, and you would have to select the one that you're actually supplying financials for. You'll be then asked to enter the main business of the licensee. So there's a whole lot of different things that you can enter in there. You'd also have to select the business structure that best suits you. You could be a standalone company or a sole trader. You'd also have to select a year-end date. Now, what that means is if you jump in tonight, for example, into the online portal, and you're going to have all the documentation that we'll talk about soon in front of you, if you used your reports or your financial information that your accountant, for example, or your business accounting package that you use, so if you use MYOB or Xero, you would use the date that was compiled for you, and that's the date that you would be entering in here. Now, if you are an SC1 or SC2 licensee, so up until the 2nd of December, that is going to be turnover, 2nd of April, that is going to be turnover between sort of $1 and up to 600,000. From the 2nd of December, sorry, I keep saying December, from the 2nd of April, that is actually going to increase to 800,000. Now, what you are required, because you're self-certifying, you are not going to have to get anything specific prepared for QBCC. You're not even going to have to provide us with specific information. All you will be doing is opening up the information that you had prepared by your accountant or your bookkeeping system or your financial computer package that you use. If you had that prepared for your end of financial year last year, you'd have that open in front of you. And you'll just be giving us information such as declaring revenue and your net tangible assets. You'll not be required to engage an accountant at all. Now, your first report is due on or before the 31st of December this year. Now, we've had some questions come up at the roadshow. What happens if I go in and lodge it now? What date am I using? Well, again, you'd be using your previous financial year's information. But let's say you leave it until later in the year. If you go to your accountant, let's say September, then you'd be using your end of financial year for 2018-2019. If you go in and you lodge it now, then you're done for the year. You don't have to lodge it later in the year. You will be allocated with a new annual reporting date for 2020 onwards. So we will allocate that to you based on the information you've provided us this year. So if we see that you regularly see your accountant in, say, July, then we will make sure that the date that we allocate to you sits in within that time frame. And if that doesn't suit, you are able to apply to have that changed. Now, any new licensees who get their license granted from 1 January onwards, they will be allocated an annual reporting date at time of the granting of that license. However, we have had some licensees not long after the 1st of January that did get their license granted and weren't actually allocated an annual reporting date. You will actually fall into this category where you have to provide your information by the 31st of December. Now, the screens and what they look like for you. So you can see here, the first screen you'll see is a profit and loss screen. You'll be asked to put in your construction revenue and cost of sales. Your next screen is a balance sheet. You can see the little I information buttons there. If you click on those, they actually expand out and give you a full definition of what those mean. And the final screen for yourselves is supporting documentation. As I already said, there's no requirement for SC1, SC2 licensees to actually give us any information at all. So you don't have to put anything in here, but you do have to make sure that you check this little box down here, the declaration, and then you submit. And then that's you done for the year. Now, if we look at categories 1 through to 3 licensees, so this is, I mentioned before about turnover between 600,000 and 800,000. If you are currently sitting in this category 1 bracket, from the 2nd of April, you will actually be considered an SC2 licensee. Now, it's really important to note that if you are a category 1 licensee, and you are relying on a deed of covenant and assurance to make sure that your company meets the minimum financial requirement, the net tangible assets to be a category 1 licensee. When you become an SC2 licensee, you cannot rely on a deed. So that means you're either going to have to look at making sure the company has those net tangible assets in its own right, or you look at increasing your maximum revenue to stay within that category 1 licensee so you can continue to rely on a deed, but you will have to provide us by the 31st of December with an updated deed. It's that statement of financial position. So you can see there that in that middle bracket here, we've got, you will also need to give us your profit and loss information. You will also be required to fill out a balance sheet. You'll have to give us a statement of cash flows. Now, these are due on or before the 31st of December. And like SC1 and SC2 licensees, from 2020 onwards, you will be allocated your own annual reporting date. Now, I neglected to say, if you are that category 1 licensee that is going to shift into that SC2 category and you've already supplied us with your financials, you don't have to do it again after the 2nd of April. That is fine. You've supplied for this year. It just means you've given us a little bit more than what is required for a standard SC2 licensee. Now, the screens and what they look like for yourself. So you can see that they're a lot more fleshed out. You've got the same profit and loss as an SC1, SC2 licensee. But you can see here now that the balance sheet page is really starting to drill down into those specifics of your assets and non-current assets, and also your liabilities. Again, you've got little information fields. They do give you further definitions. And these grayed out fields that you can see on the page, they actually self-calculate, so you don't have to have a calculator next to you. So as you are filling out these fields, that will self-calculate down the bottom. You are able to have, we have a user guide if you're really wanting a bit more assistance in filling out the form, and that is available on our website. I'll ask Laura to provide a link to that in our chat so that you can access that user guide as well. So again, you don't have to have any specific information prepared by your accountant. You are having open what you've had already prepared by your accountant, bookkeeper, or if you are doing all of your your internal management system through MyOb or Xero, you'll actually have that open. You are plugging in the figures into the system from that information. What will happen is at the end here, the required documents are, you're just going to give us a copy of what you've been drawing your figures from. You don't have to get them specially prepared. So if you have a trust or a partnership, we will also require the financial information for them. And in here, you can see that you will need to choose your file and you can click to upload it. You'll see each of them listed as you upload them. And again, you'll have this little checkbox declaration there, tick that and then submit. When you click submit, you do get issued with a case number that you can refer back to if you need to contact us about it. Now, if we look at our category 4 through to 7 licensees, so this is those with a turnover of 30 million plus. Now, you've only got another week or so to submit your financial information. It's due on or before the 31st of March. You have to also provide us with the same sort of profit and loss balance sheet information. There's a little bit more that you do have to provide us with, and I'll just flick through to those screens. So the difference here is if you are identified to be a reporting entity defined under the Australian accounting standards, or if you're operating within a group of companies where one or more of the group is identified to be a reporting entity, then you'll be required to provide the QBCC with a copy of all audit or review reports which you would provide to ASIC or ASX. So you must provide signed financial statements for the most recent reporting year for yourselves by the 31st of March. Now, if you are a non-reporting entity, you'll need to provide your financial statements for the most recent financial year. So on this page that you can see, the first question that you get asked is, are you an ASIC reporting entity or not? So if you click yes, it'll ask you what purpose and the type of report that you are providing. If you are a non-reporting entity, it's going to ask you for, again, the type of report, but it's also going to ask you about the accounting standards that have been applied to the documents that you are going to be providing us. So again, it's not that you are having any specific information prepared on QBCC paperwork. You are supplying us with what you've already had prepared as part of your usual business practice. Now from here, again, you can see the same sort of screens as what was in the category 1 through to 3, your profit and loss, your balance sheet, where it really starts drilling down into those assets and those liabilities, statement of equity and a statement of cash flows. You are required to upload the financial information that you are relying upon. The difference here is you can see it's got a written declaration. Now, this written declaration you'll be required to download, and that you'll have to print that off. Now, that is a declaration that verifies the financial statements that you're providing. Now, again, that doesn't have to be signed by an accountant. This is you as a licensee or the director, if you've got a company, that would be signing that. Also, one of the other differences for category 4 to 7 licensees is that there is a requirement to provide notes to the financial accounts and also a description of measurement, and that's the basis for the accounting policies relevant to the statements that you're providing us. Now, some key messages after all of that. You know, what happens if you make a typo and you go in there and your fingers hit a 4 instead of a 5 and you've submitted it and off you go, happy days, and you think everything is great. It's not, we're not coming straight after you with a suspension or a cancellation of license. We will come back to you in the first instance always and ask you what's happened here. And it's at that point we would then ask you to maybe resubmit some information or provide us with some information. And if you don't do that, it's at that point that at our requests of asking you to come back to us that we may look at commencing a financial audit. Now, the risk of a financial audit could mean that your license could essentially become suspended or cancelled. Now, suspensions and cancellations of licenses do go publicly on our website, and you may have even seen recently that we may issue a public warning where a large company's license is either suspended or cancelled. So what happens if someone provides false and misleading information on purpose? Well, essentially, it's an offence to provide false and misleading information, and you're criminally liable for your actions, and the QBCC can take action. If you are a nominee or a site supervisor or occupational licensee, you don't have to provide financial information for your own license. If, as I mentioned before, you can nominate someone to act on your behalf to go into the online portal and submit information. So it's just bearing in mind those key dates for 2019. So we've got 31st of March and the 31st of December. They are not going to be the same dates moving forward. 2019 is a catch-up year. We need to see where everybody is at. And from 2020 onwards, you will be allocated with your own annual reporting date. So if you and your mate may have 2 different reporting dates, and that is fine. If you're a Category 4 through to 7 licensee and you provide your financials on the 31st of March, you may get a new annual reporting date sooner than 2020. You may be asked to provide information again, say September, October this year. But we will contact you and give you at a minimum 40 business days notice of your annual reporting date. So just bearing in mind the change for Category 1 licensees between 600 and 800,000 moving into an SC2 licensee. If you are an existing SC2 licensee, your net tangible assets will increase. At the moment, it's 36,000. It's been 36,000 for a number of years, but it is going to increase to 46,000 from the 2nd of April. However, you have until the 31st of December to make sure that you meet that net tangible assets. And if you've got a mate who's applying for a license, there's no change or from the existing requirements. They would still be submitting an application, and there is another separate report. This is called an MFR report, and it is a specific report that does have to be prepared in some cases by an accountant, and that report is a certain document that you have to give us, and the age of the accounts that document must rely on can be no older than 4 months old. That 4-month-old age of accounts does not include annual reporting for 2019. For future annual reporting, when we allocate you a date, that's when that 4-month age of accounts will actually apply. There's also a requirement for an MFR report to be prepared if you are looking at increasing or decreasing your maximum revenue and you are a Category 1 through to 7 licensee. If you are an SC1 licensee and you're moving to SC2, it's a tick and flick form that is available on our website. So there's no specific report that you have to get prepared. And that's the differences between the annual reporting and that MFR report. So these changes are going to benefit industry and the community. It will allow the QBCC to better detect and mitigate the damaging effects of potential insolvencies and corporate collapses. Now, as I mentioned, they have been specifically designed to ensure that the annual reporting requirements are of minimal disruption to yourselves, as in it's now based on the information that you are getting prepared as part of your usual business practice anyway. But we've sent out correspondence to licensees advising of changes and steps from here. We will continue to do that. We also have our social media channels such as Facebook and Instagram, where we also post messages and updates about this, as well as many other legislative changes. If you like social media, jump on there, follow, and help keep up to date with some of these changes as they come through. Essentially, the ensuring financial success and the industry's growth is determined by solid payment practices across the board. So it's about you getting paid and the running of a financially sustainable business when you are paid for that work. So you may be, fantastic on the tools, but if you need help getting your business financials, getting that financial foundation rock solid, perhaps consider assistance from a business or financial advisor. Accountants provide advice. We're also providing specific training for accountants, and they also have reference material that's available on the QBCC website for them to access. So if you are listening and you are an accountant or you are a bookkeeper, I will put up now our email address. If you can't locate on our website where the information is, send her an email and I'll send you out the link to that. Now, there has been a whole raft of questions. If I can't get through to your question out loud, I will be compiling all of these questions, and I will compile answers, and I'll actually send them out to you. So let me go through some of these key ones here. Just bear with me one moment. I hold a contractor license, but I'm not trading under my license. Am I still required to satisfy? Yeah, look, as I mentioned during this, yes, you are still required, if your personal license is a contractor grade license, but you also have a company as well, then yes, you're going to have to provide annual reporting for both entities. But if your personal license says nominee supervisor on it, then you are not required to lodge the annual reporting requirements. Does my actual revenue include GST? No. Okay, so when calculating your revenue, you just need to exclude the GST because it's no benefit to you as an applicant or a licensee. If I'm a nominee for a company, does the company's revenue need to be included when reporting revenue for my individual contractor license? Oh, good question. Okay, no, if you're contracting for work under your individual license, then you would only need to include the revenue for yourself. When you are doing the annual reporting for your company is where you would do all of the company's turnover. Now remember that revenue for yourself, it excludes salary and wages as received by an employee. So if you're the director of the company and you're drawing that salary, on the page where it asks you to enter your revenue, you would just put $0 in there for you personally, unless you're actually entering into contract under your own license number. Do SC2 licensees need to have NTA of 46,000 from April? Okay, so, well, yes, the legislation increases the level of net tangible assets for SC2 licensees on the 2nd of April. And yes, essentially you'll need to make sure that you hold the appropriate net tangible assets. There is an allowance under the legislation that you have until the 31st of December 2019 to actually prove that you've and actually meet that higher net tangible asset. So currently it is sitting at 36,000, but it will increase to that 46,000. Can I put my license on hold if I'm not trading? Well, you can change your license grade to a nominee supervisor if you like, if you're not trading. So that, as I mentioned before, if you have a nominee supervisor license, you actually cannot enter into contract under that license. So you could look at changing your license grade to a nominee supervisor license. It's an application on the website. It is as simple as ticking a box saying I'm changing my grade from contractor to nominee supervisor. There's a lesser fee that you have to pay per year if you were looking at pros and cons to become a nominee supervisor. And also you don't have to meet the minimum financial requirements to hold a license. But just remember that if you do that, a nominee supervisor license alone does not allow you to enter into contract under that personal license. Another question here, are the annual reporting requirements being introduced in other states? Well, if you enter into contract outside of Queensland, so the regulation only is for Queensland, but if you are entering into contract under another state's licensing regime, I would suggest that you contact and ask if there is minimum financial requirements to adhere to. And another question here, what if you already have a number of contracts on foot and your actual revenue already exceeds your maximum revenue? Oh, that's a good question. So you're required to actually declare your maximum revenue before you need to notify us before you exceed your maximum revenue. So if you are an SC1 licensee where the turnover is up to 200,000, before you exceed that by more than 10%, you actually have to supply us with, there's a declaration to move up to SC2 license, and that is also a tick and flick form where you're declaring that you have that higher net tangible assets. Likewise, if you are a Cat 1 through to 7 licensee, if you're a Cat 1 through to 3 licensee, or a Cat 4 through to 7 licensee, gosh, sorry, I feel like I'm repeating myself there. You are required to, before you exceed your turnover by more than 10%, you are going to have to go and get a MFR report completed by your accountant. And that report is going to show that you have the higher net tangible assets to support the higher turnover. So if you've already exceeded your maximum revenue, my suggestion to you is go as soon as possible to your accountant and get that MFR report into us so you're not in breach. If you are in breach, that could result in a suspension or cancellation of license. Do I need to submit an MFR report for annual reporting? No, you don't. MFR report is only for if you're applying for a new license or if you're increasing or decreasing your maximum revenue. Annual reporting is different set of information. That's that information that you've already had prepared as part of your usual business practice that you'd be supplying us. Can you hold a builder's class of license and be an SC1 or SC2? SC1 is not available to builders, so your minimum would be an SC2. How can so I'm a director, can I nominate an authorised representative? Yes, you can. How do I set up to be a director in the first instance? Okay, well, that's good. If directors are automatically associated with a license, so the director would just need to log in if you've been in before, or if you've not been into my QBCC before, you'd have to register, and you would use the email address that you'd previously provided the QBCC. If you don't know what that is, or it's changed, and you don't have access to your old emails, give us a call on 139 333 and we'll update your details, and from there you'll be able to log in. Can you include your family home, or does it have to be in a company name if you're trading under a company entity? As an asset. So, okay, if you're trading under a company, then you can only include that, say your family home, if it's in the company name. If not, and you're a category 1 through to 7 licensee, the company could rely on that being an asset under the deed of covenant and assurance. So that's that deed that say the director would put forward and assure a certain amount towards the company so that it could hold the license. Would it be beneficial to get my accountant to prepare my revenue statement? Well, it's not a requirement, but if it may be beneficial, you may wish to include that with your annual reports as a supporting document. That's not required. Do you only include the revenue generated in Queensland? Now, no, you have to include all revenue that you receive, excluding your salary, as I mentioned before, or wages, but you have to include all of your revenue. So if you have revenue coming in as a licensee from, work done in South Australia or New Zealand or America, then yes, you would have to provide that. What happens if I just renew my license for 3 years? Do I submit annual reports? Okay, yes. So at the beginning, I mentioned that previously you would only be able to renew your license annually, and at that time of renewal is when you would give us your financial reporting information. But since that requirement was removed in October 2014, there was then an introduction of 3- and 5-year licensing. So now your annual reporting, when you submit, doesn't align with your license renewal. They're two separate things. So you'll get your license renewal as you have been getting, whether it be 3 yearly, whether it be annually, 5 yearly, whatever. You'll still be doing your renewal. Your annual reporting date is going to be annually. Look, there is still a number of questions there, but we have sort of met the time for this webinar. I will compile questions and answers and I will send them out to you. Thank you so much for the great questions. I hope that you have found this beneficial. We are hosting more webinars. If you're accountant, bookkeeper, senior employee, whoever you think they would benefit from listening to this as well, they can access that from our website and they can register to attend. Thank you very much. Happy Friday. I hope you all have a wonderful weekend, and We look forward to sending you out those answers soon. Thank you.